welcome to the afternoon session, everyone. I mean, this is quite a chunky topic, so I thought we'll do just a quick round of introductions to kick us off, and then I'll set the scene. So hand over to
William. Hello everyone. I'm William. Portfolio career nowadays. Previously modular, so kind of infrastructure player. Got to know the cross-border space there in particular. Nowadays, Dapio, which is an embedded card acceptance play, mentoring of various fintechs, and probably most relevant to this, running the UK Digital Pound Foundation's retail use case working group, which we'll come back to.
Got it. Hi guys. So weird headset arrangement here. Not sure what I'm doing, but I'm John. You can read on the screen. The Chief Revenue Officer for dLocal. We're going to be the payment rails of the future. That's probably the thing I should say. But we focus solely on emerging markets, helping people do collections there and then dispersing funds as well. And I've been in cross-border e-commerce and payments in and payments out for the last 15 years.
Cool. Hey everyone, I'm Aaron. I head European banking and payments at Wise. We were formerly called TransferWise. Some people don't know we've changed names yet. I kind of work with the product teams to help them build the payment rails and the ways of moving money around the world, ideally trying to make them as instant and convenient as possible. Been there around 5 years. Previously, come from a large UK bank, again, working on correspondent banking, which is kind of the traditional old school way of moving money around the world. So hoping to look at what's broken and try and fix it a bit.
Good afternoon. I'm James Butland, so I'm at Airwallex. So Airwallex, we're a global payments platform. I've been with Airwallex for about 6 years now, from Series A up to Series E, where we are now. And my background is cross-border payments. I used to work at TransferWise, where Aaron is now. And before that, I worked for a hedge fund for a number of years. So Airwallex, we're really trying to solve businesses' challenge of going global, mainly for e-commerce customers in 2023.
Cool. Thank you very much, guys. So I thought I'd kick it off with a bit of a personal anecdote, and thanks to Max's really well-scripted introduction. In a previous life, I was on an FX trading desk and did a lot of emerging market FX. And one thing really struck me was I could execute a trade in a millisecond, but it took T+2 for the funds to settle, and it never quite sat, right with me. And then, as many of the guys on the panel would know, your payments ops team is chasing down an MT 103 message because you've lost the client's money, and it's just a horrible, horrible payments experience. And that's the classic, incumbent today being Swift. And I guess that's really what this panel is about: is looking at how double clicking on the innovations that are looking to kind of innovate on that base layer infrastructure. And I think we can dive straight into it with a bit of a chunky question, but I guess we'll kick it off with, who or what are the, contenders for cross-border payments of the future? Maybe William, kick us off.
You know my view on this. I think it will ultimately be people that we know today in partnership with the new wave as well. So I can see the current infrastructure players like Swift with that deep embedded, decades of experience, morphing and adapting and taking on the new stablecoin, etc. rails. So I've got a bit of a contrary view there. But guys, what do you?
I think the wise view, and I'd probably share the view most of the time, is that we don't really discriminate against who. What we look at the customer problem, and the customer problem is people just want to move money around the world really, really quickly. And all money and all a payment really is data, right? So when you send an email, you don't get charged more going from Yahoo to Gmail versus Gmail to AOL if they're still around or whatever. So why is a payment inherently any more complicated? Just moving money from A to B. The problem is that everything connected to it right now is sometimes 30 years old. Like some of the biggest banks around the world. We're okay at this in the UK, but especially in Europe, outside in APAC, are running systems which are like 30 years old. So the concept of money moving instantly is A, like very, very alien to them, but B, when they figure it out, it's a very expensive tech build. So who will, and it's kind of a race now, right? Will the banks and will the kind of legacy infrastructures catch up and build it quickly? Or will something else, someone else, a group of people, a group of companies figure out how to do it? And then I I think that those groups of companies are figuring it out, but where they've kind of got stuck is how to scale it and how to scale it compliantly.
When you look at payments and what we're doing at Airwallex is 93% of our payments are instant, and people want their money instantly because it builds trust. It ensures that you don't get thousands of customer calls saying where's my money. But there is still a place for Swift. A lot of people still trust Swift over using a new fintech. So I think global banks will still exist for the foreseeable future with the Swift network. But I think the future of payments is really with companies such as ours who are doing things instantly in a much more elegant fashion than the banks.
Yeah, I'd echo some of what the guys said, but I think also like some of it's happening already, right? The last few years, and you've seen like several successful public companies like start with solving a really specific customer problem using the existing infrastructure. So I'm sure like people who live in, are from Pakistan and working in like the Middle East now and sending money back, they probably find using Remitly like a really efficient solution. So to use some of the new like distributed ledger technology or other innovations, like that needs to be invisible to those folks, and an enhancement on the current experience, So I think a lot of innovation has happened on top of the plumbing currently. That will continue. And I think a big question we all have to ask is like, what do we want that plumbing to look like in the future? And then how do we contemplate that being like email? I think like email is going to be impossible, to be frank, because particularly in the markets we're in, and I think you even see it in more developed markets too, governments play a really outsized role in the economy, right? And things like that. And I think it's going to be, we're all different people here. It's very difficult to get all these different peoples and cultures to agree on one thing, particularly something that like could drive taxation in the economy or things of that nature too. So I think you'll see slow progressive incremental innovation over the next few years, and probably a bit more aligned with James's view. It'll be a mixture of the current winners, and I don't think there'll be one like clear winner. I think folks who continue to focus on like their end customer experience will be the ones who, when they typically are in every walk of life, right? The ones who do that, and I think that'll be no different this time.
Businesses, if there wasn't, this regulation and this problem moving money with these smaller countries, then we wouldn't have companies. The whole point of these companies is to simplify that for our customers.
And it strikes me we've gone from the old school Swift etc. ways of doing it to probably for about 10 years now, fintechs and TransferWise, when it was TransferWise, was absolutely leading in this in the UK market. Piecing things together on particular corridors. Frankly, still using the fiat rails and so on, and that's the way a lot of that solution. And then I suppose right here today we're talking about the next gen of the whole. Does DLT take it that step faster, quicker, cheaper? So we're kind of in phase 1, phase 2, big land grab, like you said, I guess.
And the infrastructure providers, like some of them are having increased costs now too, right? Because if you're pre-funding to send that money in Pakistan, some of the guys are asking you to top up for them ahead of time. So the bank is saying like, yeah, exactly, the liquidity point on it. So like in the current macro environment, interest rates on those when customers to build their business, I'm not sure if it happens in the guys' businesses as much, but we see a number out there who have to do that pre-funding and borrow against it and use a balance sheet. So like I think in the current environment, infrastructure-wise, I don't see how that's like a going concern going forward as well, and it would be a major roadblock to continuing to develop Remitly and these other companies also.
Yeah, I think that's a very good point. When you have one-way flow, if you're just doing payouts in the country, not collecting money on the other side, you do have that liquidity trap where you need to either top up or withdraw money. I think that would be a problem as money gets more expensive over the next couple of years.
I've got a question actually for you, Aaron, if you wouldn't mind. No, because this was obviously core to your company's model as it built up over the years. What was the high-level story about how you balance that, the liquidity challenges of instant delivery if it's very heavy one way?
Yeah, I think there's a couple of ways we've tried to solve this. One is just by looking at the data at an insanely detailed and close level. Like, not just what day do we need the right money, but what minute of the day do we need it, right? So if we know that our customers are sending, between 9 and 10 o'clock in the morning, or 3 or 4 o'clock US time, UK time, when the US wakes up, making sure that to the exact minute we have the money in the right place where it needs to be, right? So you solve it with data. You can only get so far with that because you might know if the money needs to be there at 3:15 in the afternoon. But if it takes 2 days to get the money there, you're still a bit screwed, right? So there is still an inherent dependence on actually the rails and the movement of that money. it needs to be quicker, it needs to be faster, and it needs to be the on and off ramps. As you know, is very the conversation that kind of dominates the crypto space is actually quite important everywhere you go.
So, I mean, I think we're talking around, it's kind of a combination or convergence of Swift, the fintech networks that we've seen over the last 10 years, the new entrants on the block like DLT. But maybe someone like, Wise, who did pioneer a lot of this fintech, the fintech networks, and it's probably the forerunner there. How are you guys thinking about DLT and maybe inserting that, touching on John's point around the pre-funding, DLT can solve a lot of these pre-funding issues in your own network, yeah.
Yeah, I think for us, well, we to be completely open and transparent, we haven't yet really kind of gone deep in anything DLT related. The things that are holding us back is like, for us, we're regulated now in like 10, 12 different markets globally, right? So from the US to Japan, the UK, Europe, Brazil, and actually getting, like DLT regulation is moving, but they're actually moving in very different ways in different markets. So like actually finding harmonization across fiat is hard enough, and this is regulation that's existed for like 30 years. So trying to do that in the DLT space is like another level of complexity. We're not against it, and we're not against doing it, but what we have to be very conscious of is, A, can we do it compliantly? Can we scale it? And also, does it actually solve the problems that we're trying to solve, right? If you're moving USD around the world to like between the US and the UK, I'm not sure how much you need that, right? But I think in the earlier panel, we're talking about Venezuela. We're not in Venezuela, but again, if we were to look to solve that market, what we'd want to do is say, what are the things and what are the rails that solve our customer problems, and then figure out how we can solve it, rather than just taking the rails and not really thinking too deep about it.
Yeah.
So we use it, Chris, as you know, in certain markets where moving money is challenging, like South Africa being the operative example. And I think some of what the industry suffers from with DLT at the moment, I think someone mentioned on the prior panel, is like credibility from a compliance standpoint too, and how all the plumbing works in the background. Like, I can say this because we have to file it, but we lost 5 million during FTX because one of the companies we work with to take the money out were using them as the back end, and our treasury team had to go in and draw the money down the account, and someone didn't do it that exact day. Exactly. Not plug for Chris here. Not the case when we've used we've used your solution. So I think we're a bit more risk on in terms of looking at those things, because we have to get liquidity in the markets that we're in, because they're particularly challenging in emerging markets, as you know. But I think there's a place for them, but there's like a lot of different folks in the space now. I think that's got to consolidate and clean up a bit too, because it scares people when that happens, right? And we had a lot of dialogue with customers and partners about why we were using it, what was it about, and it was challenging to do that during that time, because
I can imagine.
I mean, it scares people for sure.
And that's exactly it. I mean, you touched on it earlier about like the plumbing, and I think if William was talking about the evolution of these networks or these payment networks. You've had a really old one. We've gone to the fintech networks. DLT's coming in, but you could probably argue that we've largely over the last 10 years in this kind of decade of fintech, coming into its own, is really been a UI upgrade on kind of existing infrastructure, and DLT really presents an opportunity to actually upgrade the core infrastructure, the actual system, the payment systems underneath. So, I mean, on that, there's several considerations that we need to go through. But for DLT to actually get adopted as a payments rail throughout, what are some of the considerations, maybe James, in terms of that you need to consider in terms of DLT?
Yeah, I think if you want to move on to something new from where we are now, it has to offer a tangible benefit to the current system. So, it's speed, it's transparency, it's cost. I think if you can address those three, then there's a real opportunity to bring in that new level of infrastructure. You're right in terms of where we are now with, fintech companies such as ours, in that we are a UX layer, and underneath there are traditional banks. So we hold a bank account in the Philippines, a bank account in the US, and that's how we move money, and we offset it and present to our customers one platform. But we are still relying on traditional banks. So I think to your point, yes, there is room for improvement, but it would take, that step change and what's it going to give us over the current solution to get more companies, well, not even companies like ours to move on to it, but companies like yours to come and take some of that share from us.
And transfer-wise, I mean, in terms of like the view there?
Yeah, I think the way I look at it is like, if it wasn't for DLT, Like you look at where Swift is now.
Sounds like a
versus
joke, doesn't it?
Swift.
It wasn't for DLT.
If it-
7 different punchlines depending
Yeah.
on who you ask.
yeah,
Yeah.
I know. So like if we like Swift has actually made considerable progress in the last 10 years. I don't think that happens if it wasn't for DLT. And like I remember like 10 years ago, everyone was like, Bitcoin is going to change the world in terms of payments. We should move all our payments onto Bitcoin. It's going to do that. I think that gave Swift a bit of a kick up the backside, which is like, hang on a sec, like this stuff is still based on rules and standards from the 80s and the 90s. Like what is going on? So we're kind of taking a bit of a backseat and watching and seeing, what people like BVNK are doing and saying, actually, like maybe they can figure this out because we haven't yet. And I think competition is just inherently a good thing. We're not biased towards kind of any kind of network there. What we just want is people to solve the problems.
But this is a stage of maturity argument that we talked about. So people probably know the famous Gartner hype curve, right? Where you get the peak of the hype, you get the trough of depression, and then you get climb out to maybe not early but next adopters and so on. And I don't know. I feel this has gone through the peak of the hype and is just climbing back out again. Another analogy might be the stage of internet maturity. If you do the parallels on that, and everybody has their own view. For me, it's about 2002, where the Wild West is calming, and I mean for finding proper use for DLT on cross-border central infrastructure.
Yeah, so I think and there's also kind of the element of you guys both touched on it earlier down there. Is what use case are you solving for here? What is the customer problem? The customer's problem is moving money from point A to point B, and generally they don't care what the underlying infrastructure is. But if there's a better way to do that, generally the payments technology will get adopted. So, in terms of, what sort of use cases have you guys seen more specifically? John, maybe, yours is a good example about, using stablecoin settlements, as after processing as a PSP. There's, also kind of P2P remittance use cases that are increasingly coming. Are there any other use cases that you guys have seen or, across the, your businesses?
I guess my answer. Sorry, do you want?
Go ahead.
My answer to that is yes, I guess you're digging for refined kind of cross-border cases there, which I've rather simplistically bucketed into everything. But the point is, they're the easy use cases. Other kind of particularly retail payment use cases beyond the cross-border are the tricksy one, which I guess we talk about a bit later. But yeah,
I was going to say, like we're focusing on cross-border, but actually, domestic is also still broken in a lot of places. We're again very lucky in the UK. We've had faster payments. People now in the UK are very used to faster payments, but the world's biggest economy in the US still moves money.
got Fed now. It has honest.
Exactly. So and they're still figuring this out, and now they've gone and built two things, and like it's crazy, right? Yeah. So like, and that's the world's at least for now the world's reserve currency, and how it. And if they can't figure out the plumbing and how to do it at scale, like there are so many different currencies out there, which, maybe they're not G20 currencies, maybe not the biggest currencies in the world, but these are still core means of transferring value from person A to person B that really need to get money quickly.
Well, it's hard to transfer from the plumbing too, right? Like what United States economy was built on the banking infrastructure. Like if you look at India or Brazil or the other markets, they can show like you can build a financial infrastructure if there's like a will there.
Yeah, and that's the key, right?
And where it's less credit card based and things like that. So
I think some countries have done that. Some countries, we've got business in China. I spend a lot of time in Shanghai, and they basically moved from that credit card point to sort of mobile wallets and WeChat Pay and all that sort of stuff. Right? Exactly, because it was quicker, it was easier. I don't think they even bothered with checkbooks. Where in the US, we still get checks sent to us. Yeah. So I think domestically, there's a huge opportunity as well to optimize payment systems. Because you're right, we're very lucky in the UK with faster payments and SEPA Instant in the Eurozone. But then if we go and try and pay out in the Philippines or somewhere, there's probably 3 or 4 different schemes we have to use. So I think, local and then taking that globally as well, there's huge opportunities, which don't flow through G10 currencies,
I think in terms of taking these kind of local payment rails that you guys, you've obviously the core cross-border infrastructure, local payment rails, and at the end of the day, connecting all these local payment rails to a blockchain, can solve a lot, but you do have these kind of friction points on an off-ramp. So in terms of DLT, maybe John, if you think through that, what kind of needs to happen to move, I guess, the conversation slightly forward? We obviously, there's an education journey, a lot of people are going on. But in terms of connecting all of these systems together, what do you think needs to happen?
Yeah, the challenging part is always like the cooperation, right, or co-opetition between different groups too. I'd agree with the comments the guys made. Like you look at what happened in China, India saw that, and then they had PayTM, which started as the rail there, and then the government said that's really good. We should just build our own version and force everyone onto it. So if you look at like the growth in like Google Pay or Amazon Pay in India, all of it's actually UPI underneath. If you look at like Pix in Brazil, that's copied from what's happening in India. So as I think about population growth and where the next like generation of people are growing up, it's all primarily in emerging markets, and a lot of the remittance companies have grown because these people are moving around and sending the money back. So that I think is your best case, like prove it in some of these markets here and prove utility for it. And as these folks naturally migrate to larger, more classically developed economies, I think that's where these solutions will have to come to play. I mean, we've all been in like a Harrods and seen Alipay now. That wasn't the case 15 years ago, right? So I think it's those kind of inflection points on a consumer level which really make the difference. And as you said, Chris, the plumbing for that at the back end, I mean, who cares what it looks like? Because it should all be invisible in theory. But I think the more these DLT type solutions can start there and maybe then prove out the viability, I think that's what will kick them into being more used mainstream, I think, in more developed economies.
But what's the key differentiators of the DLT are going to be what? Ubiquity, interconnectedness, and
Visa,
superior
same thing.
Superior liquidity. Isn't that what the
so.
key attributes of it? That's what you've got to deliver to.
Yeah, I think it's
And
easy
the rest
to
is
use.
invisible.
I think the world, we went through that, period of globalization, whereas now we're looking at more nationalism, more borders, geopolitical environments getting a lot worse. So I think, anything you can do to make it easier for people to move money, I think is really important. I think that's what it provides, people moving money, moving countries, because the world in terms of geopolitical events is getting a lot more nationalized in terms of borders and regulation.
And I think that's what it really comes down to, is like governments and central banks and how much they want to control things. I'm not going to like take a view on this, but ultimately what you look at payment systems ultimately feed through to a central bank. Central banks are run by governments. Governments control their currency and they want to control their currency. Now, can you see a central bank saying, actually, we don't care if people hold pounds in the UK, they might hold Facebook coin or something like that. Will they ever allow that? I don't think they will.
This has come up a lot. Sorry, with my Digital Pound Foundation hat, I was talking to the Bank of England on this. They obviously sent out that central bank digital currency consultation paper, so they're in listening mode. But absolutely, the key concern about that is distortion of monetary policy, which ultimately boils down to not disintermediating commercial bank money, such that you don't distort, SME lending and the cost of credit and all of that. So they've got some fairly good reasons fundamentally. And then, of course, from an end consumer point of view, you get, government control, because of course China was pretty much the first one with any moderate traction in that space. So
my feedback, because I've been engaging with various central banks on like CBDCs, and my feedback has always been like, if you want to do this and you want to do it properly, you have to be prepared to like break the wheel. You have to break.
So
what's
the wheel?
Break
What's the wheel?
The entire financial system of like the banks are where you go to hold your money.
How did that go down?
It didn't go down too well.
Well, yeah, but they're not going to do that, are they?
No, exactly. So then what you end up doing is you then water things down, right? And then you really end up with is a CBDC that basically is a 24/7 payment system, which you can probably achieve through other ways.
Which is what the Bank of England put in their little mini thinking about a use case in UK retail, was like it was basically a replacement for point of sale businesses. So of course, Visa, MasterCard, faster payments. What the hell is the point of that? Hadn't really, So,
but I think, William, some of the work that you were doing at the Digital Pound Foundation, we just spoke about CBDCs, and every central bank seems to be trialing CBDC. I think a lot of them got quite scared after the DM. Facebook wanted to launch a coin, and a lot of the research got kicked off on the back of that. But in terms of you mentioned a lot of the use cases around, or that you're exploring, because you're on, you chair the use case working group for the Digital Pound Foundation, was really cross border. And are there any other tangible use cases that they're currently exploring that you think is relevant?
Yes, and some of them are kind of to do with cross-border trade at least. So yeah, just to be clear, we took cross-border and went, job done. I know that was a hell of an assumption, but there's a blatantly obvious use case for that, and we're not going to think more deeply on that. So there were things that were kind of UK centric, things like matter to the individual or the business, making tax effortless, which is not just government sucking tax out of you more quickly, but it could be all those rebates you have, VAT and B2B types taxation scenarios, that kind of thing. And then it went a little deeper into talking to HMRC as well about cross-border trade and all the the correct taxation. It all boils down to the programmable payment. So it's the smart contract. It's that bit. By the way, not programmable money, because that's an absolute no-no in both the Bank of England and anybody close to its world, because that sounds like I'm going to stop individuals, having full what's the word, freedom to utilize their funds. So it always came back to that. Beyond that, we're exploring that's probably one of the most obvious ones. Then we're exploring things again. It's all about the programmability. Payment on delivery is a very general term, but it can be anything from complicated high value goods, secondhand cars. There's an example where you get into, well, hang on, what's about tokenization? What's actually about the payment? And then you can extend them cross border again. So at this stage, there's a group of us with a fairly decent number of industry players, contributing, starting to write this up, engaging with government and in its various shapes and forms, and particularly I think the Bank of England, because they're now getting to this. It is a UK-centric piece. They're now getting to this thinking, and they'll take years, but this design. They've currently done the concept and the paper, but what does it actually mean? And there could be some really important architectural design decisions that either do or don't constrain how all of the payments, including cross-border, work. And incidentally, we're not just saying it could CBDC; it could equally well be a properly stable coin. Yeah.
Okay. I mean, we've spoken a lot about payments infrastructure, DLT, the different types of innovations that are happening in the space, but we haven't really touched on the card network. So, what role do you think Visa and Mastercard, John, maybe Visa and Mastercard play in the future of these, because they're big players today?
Yeah, they'll continue to be so, right? I mean, their general M&A strategy is to buy up everyone who's like not a card company or has another rail and crush them slowly over time. So they I think a couple of friends of mine sold companies to Visa, and I think they spend the next 12, 24 months doing tours for RFPs for issuing so they can keep the interchange up. So I think for them it's depending on how they view their business longer term. I've talked to some folks there. I know they're particularly worried about it, but I agree with James's view. I think like they're starting to adopt more of those kind of tech. I mean, I remember going to a meeting with Visa with the team from Coinbase in 2017, and they were telling us in the meeting that what they were doing was illegal. That's like what, 6 years ago, so something like that. And now they have a head of crypto. I read recently,
and
like
probably a
something. So they're
Catherine Gu, right? And then,
I can't remember.
But then they probably got a team of about 200 around the world as well.
It was mainly lawyers, and then one guy who was from their payments team. I don't know, whatever. So I think that they're very adaptable, right? I think, and that they can afford to invest a lot in the space because they run a fantastic double-sided network, right? It's the greatest business model in the world's ever invented. So I think you'll see them being, I hope, a positive player, because also if they invest in the space, they'll encourage their M&A. In one way is a bad thing, but the other way it encourages more innovation, because those companies get bought and more people will come out with hopefully better technologies and better ideas too. So I think through adoption somehow, and I know they're testing different, like Ethereum as a settlement layer and things like that. So I think they'll continue to invest in this space, and hopefully that'll drive further adoption. I think their general strategic approach should help create more companies too that'll drive innovation and competition in the space.
We're missing one point though, and I don't know what any of you think. Won't they always be the last mile footprint? That's the real. Yes, they've got the two-sided model, but who want to, just what the core rails, what the currency on which it runs? Who cares?
They have a big brand and trust, right? So they have a big brand and trust, and people are used to you know, the logo and seeing it there. So if you think about maybe the role evolves, Chris. So like at the moment it's all plumbing, and maybe in the future we think about it more like that's the brand and the layer on top and the UI, and the plumbing at the back end is DLT or something else, you know. But impossible to see a world where those two are not around for.
Yeah, I think the same what we were saying about Swift earlier. Like they're always going to be there.
Yeah.
But I think you're going to have more and more competition emerging. And the thing about payments is always growing as well. So it's not like you have $100 to go after and everyone's competing for that $100. The payments ecosystem is growing exponentially. Even you know, through things like COVID, you know, it grew, you know, stronger than ever. So I think the way we look at it, people like Visa and MasterCard and Amex will always exist, as will Swift. We're not trying to destroy these, you know, companies, and you know we couldn't, but you know, we're always gonna have to offer those products alongside our products, and maybe sometime we'll get bought by them. I don't know.
I'm going to say they just make a good exit opportunity.
Yeah, I think the future is going to be choice. Like we've kind of obsessed over speed and we've talked about like instant and stuff, but actually cost also plays a part. Like I think there's probably going to be a future where it's like, hey, you can pay X and move your money instantly using one of these networks, one of these rails, or you can pay a little bit less and wait 5 minutes, 2 days, I don't know. And then you've got the other things like protections, right? Card schemes have inherent commercial protection layers, which are paid for. And some customers like that and are willing to pay for that. Some customers are like, no, I'm just paying my landlord the same money I pay every month. I don't need to pay extra for consumer protection. I don't need to pay extra to protect against the exchange rate or any kind of deductions. And I'm happy to do that. And consumers around the world and businesses are all very, very different. So to try and nail everything down to one network, one use case, one commercial model is probably A, quite hard to do. And I don't think any one company can do it. And B, not really realistic in terms of what people want.
Yeah. And that's I think some of the data that Ben put up earlier, you know, to your point, James, on the growth of the market, you know, it's incredible what the numbers are going to look like over the next 10 years across the whole B2B, B2C payment space.
Absolutely.
Yeah. Maybe just, you know, John, you mentioned, you know, previously or, you know, in discussions that we've had that 30% of your business is now payouts. And those are payouts generally into emerging markets. And I think we've very much spoken about DLT as this infrastructure layer, you know, better plumbing, that sort of thing. But I think we're seeing more and more in terms of end user adoption and consumers wanting a payout in crypto instead of receiving a payout in a volatile, you know, emerging market currency. I mean, are these similar sort of trends that your customers are seeing, or your merchants and customers?
You do. I mean, if you look at like Argentina, you would think like, you know, an Argentinian host for Airbnb might want pesos. If you read about it, you know, they'll probably want dollar.
Yeah.
So even in those markets, people are already saying, I'd much prefer to take Bitcoin as a payment there, because versus their own currency, it's failed, God knows, 100 times in the last 30 years, right? So it is a much better asset for them to hold. We see like a lot of appetite for crypto as a store of value in our markets, but we don't see government cooperation, you know, in Nigeria, and you know, some other markets do. So I think there's huge appetite there for it, particularly on the consumer level, you know, to be paid like that too. And I think we're seeing more asked from customers to like, could we do things like that in some of those markets? I think at the moment with DLT payments, or you guys have been involved in others, a lot of it's settling to companies who are extraordinarily comfortable with crypto, like exchanges and folks who are selling NFTs, etc.
The early adopter on the curve.
Exactly, the early adopters, as James said earlier. So I think you'll start to see some of those other use cases. And we know Chris, from the kind of RFPs our customers run. Like we had to go through with Amazon the fact we were going to use DLT in South Africa and get them comfortable with it. It took some time, but they got comfortable with it. Yeah. That would be a mechanism to take the money out. So I think you are seeing some bigger companies to realize the reality of like operating in a market like that and seeing how do we use some of these newer technologies. So I think it's probably still at the stage as James described earlier, but we are seeing like more requests for it, and we're seeing a higher level of comfortability, notwithstanding the point I made earlier about some of the, you know, bad actors who are kind of in the space currently, but you know, hopefully most of that will clean out the next few years.
Just conscious, you know, kind of bringing this kind of home, because we've got to, you know, keep a couple of some time for Q&A. If we look at, we've obviously spoken a bit about this fintech innovation over the last 10 years. It's definitely going to be a coexistence of current rails with some future, you know, innovative rails. you know, if we look at the coming decade, and maybe we can go through each of you, you know, your view. If we look at the coming decade, you know, what do we need to overcome really to make payments truly borderless? So, yeah, William, I don't know if you want to kick us off there.
So I've picked the. I needed time to think about that. I was going to say, I think we touched on it earlier. It's the regulatory piece, isn't it? And I'm not sure that's going to be solved in 10 years' time. So that's going to be the trick. I guess we'll probably end up with islands kind of focused around, at least on the B2B side, around, you know, the trading blocks, if you like. And there's obviously a few fiat attempts at that. We'll probably get the more advanced technical DLT, etc. version of that in whatever geographic footprints.
Yeah, I think getting incentives to align is the key thing, as we mentioned, right? And I think that's still going to be challenging with what some of the guys mentioned about government intervention, and we particularly see it in our markets, right? And there's a lot of push from different governments in two ways, actually. One, for digitalization. So in Brazil's case, somewhere how the government think about it is like it's better for taxation and the tracking of taxation in the country and receipts, etc. You see other countries now saying we have to continue to institute cash in the market, right? Because people have to be able to pay. And if you look at, you know, the geography of a lot of these countries too, most of the people who want the digital are on the coasts. But like in China and other markets, everyone who's inland wants to pay by cash. I mean, in Japan, it's a super aging population. Everyone in the country still likes to go to a convenience store and pay online through cash. So I think we're still quite away from the through borderless world, I think. And I don't know if we want it necessarily yet. You know, I think for B2B use cases for payments, it's exciting, but I think overall it'll be challenging to get there for the reasons the guys outlined earlier.
Yeah, I think governments and central banks will always think domestically. They're not really incentivized to try and fix on a cross-border basis. So I think the winners will be the people, groups of people, companies, etc., that actually show a willingness to just acknowledge and accept that, and actually say, right, how can we work around these kind of very nationalistic constraints, and say, okay, you want to do this in your currency, you do that, but we'll take that and we'll take this and we'll make it work. And yes, we'll try and make it as fast as possible, but the priority is just make something work at scale at a price that is commercially attractive. And they're not easy things to do on a global level. Yes, you can figure it out between the UK and GBP and US dollar, but how do you scale that to, I don't know how many currencies there are in the world, but all of them? That's it's a bloody big job.
Yeah, absolutely. I mean, it's regulation, but then it's also driven by client demand. So what do clients want? Do they want to move? Do they want to change? To John's example of Japan or mainland China, we do have cash-based or even, you know, mobile app-based payments. Do people want to move on to something new? So I think regulation is one blocker, but it's what do clients really want around the world in terms of managing their money. And I think B2B, B2C makes sense. I think P2P, it will really be driven by the technologies individuals adopt, to actually push their domestic regulators. And in 10 years, you may have that converge, but it will be stagged. You know, look at the G10 countries now versus the rest of the world. There's a huge gap. You know, if we go into the Middle East or LATAM, as you guys know, it's very different than doing business in this part of the world.
Cool, great. So thanks very much. Yeah, the audience has sent us through some good questions. I think there's one, I mean, given chatting about payment rails, there's one year around. Maybe I'll open this one up to the floor. I guess what's your guys' view on USDT and USDC as an underlying rail? You know, are they really stable given some of the recent things that happened in the news, the depegging?
I was mentoring a business that's using USDC for cross-border, and yeah, he had to do the emergency email of, "Oops, it's depegged when it really wasn't supposed to." Yeah, there's the inherent risk question. I guess it's probably still that because of the volatility. If the Wild West calms down, we would hope that doesn't happen again. But yeah, it does mean it stays as an early adopter technology from a trust perspective. Saying that, I suppose it was at the wholesale, you know, MSB to MSB level, so it's not directly exposed to the end consumer using it. So, you know, pros and cons.
But I think you see a risk. I mean, if you look at, you know, what happened with Silicon Valley Bank, you had a classic bank run. So there's a risk in everything in terms of the technology you use, the partners you use. So the only The only answer to that is you need to have, a backup. You need to have, not your whole business dependent on one institution or one technology. There's inherent risk in everything, I think.
Yeah, I think unsurprisingly, people want stability in their stablecoins, and but like these newer things, people freak out easily.
We need a stable coin,
Yeah.
right? Stable coin squared or something.
Exactly.
It really is.
So I think
Rebrand, yeah.
like it's like I don't know, I'm not an expert in this, but like you see like the reaction to the gold markets, right? When things go wrong, like people just go, how can I go back to like things I know? And they go back to like shiny pieces of rock because they know it, right? And people are just like very like when it comes to people's money, people freak out really, really easily. We've seen that with SVB, right? So you just need to like put a safeguard in, put another safeguard in, have diversification, and then you get to a better place, I think.
Yeah. There's one, maybe James, this one's for you, given Airwalix's kind of APAC roots. Creation of an immediate cross-border payments network, like we mentioned earlier, by interconnecting domestic payment rails, and then you've seen solutions like Singapore and India kind of connected domestic payment rails to each other. I mean, you guys were quite early in the APAC cross-border payment space. Have you guys been thinking about using those sorts of local rails?
Yeah, absolutely. And I think that's a good example of two regulators coming together to actually solve a problem. India, Singapore, big Indian expat community in Singapore. So that is quite interesting for us because it shows two regulators actually thinking about a problem and doing what underlying individuals want. So we'd love to see more of that in Southeast Asia and other parts of the world. Not too much that threatens our business, of course. But, I think that's the way the world is going. And I think what will happen is if you have regulation and these corridors open up, then our job as a fintech really becomes that UX layer, helping people manage their money, expense management, the cards, the acquiring. That's where we kind of fit in. But actually moving the money, the more efficient that can be, that's going to be good for all of us.
William, there's one, given your work on CBDCs, in your view, is CBDC, where are we in CBDC adoption? Is it 3 years, 5, 10 years away?
Oh, out into the future. Depends which geography you're looking at, because if you think about it, the early adoption has always been from either, unfortunately, government control, China, or for very bespoke purposes like, sand dollar and so on. And even then, actual consumer take up has been tricksy. But so it depends if you've got one of those kind of supposed drivers, and I think the trust has got to build. So 2 years still in experimentation, or if it's Western market, still on paper, pretty much at proof of concept, pilot testing phase, perhaps with no real money. 5 years, special use case countries will, early adopters for various reasons, will actually perhaps begin to get a reasonable percentage of GDP flowing through. On a 5-year basis, UK will have launched something, at least, an alpha, a beta, probably not a big public rollout. It's a 10-year play plus in Western European markets. Internet 2002 to mass adoption. When did we really get internet mass adoption? Early 2010s probably. We're 10, 15 years out for any impact, and it won't replace in our market here. It'll be these special programmable, the extra value add you get on the data, and the rails are just the rails in terms of the programmability and the value you get there.
Okay. Arun, this one is purely directed at you. How does Wise move liquidity around and make sure that they always have the required funds in the right bank accounts?
You have a very good treasurer.
Yeah, basically, we hire smart people and then we kind of get out their way, basically. It really is as simple as that, actually. We just analyze and just get really good at guessing and just trying to work out exactly where we need this money at the right time. And we build like really deep partnerships with the banks that we use to make sure that we are squeezing that last 1% out of every single relationship, every single bit of technology. And we invest to make sure that we can automate the crap out of everything. And then, it's just a case of having really good data science, having really good understanding of the markets, customer behavior, what customers want to do, what day of the week, what time of the year, etc. And until we get real 24/7 cross-border rails, we're always going to have a dependency on like modeling, basically.
Yeah, it's data crunching, and you've got to pre-position on the old Swift rails.
Yeah, exactly.
Fundamentally, yeah.
I think it's quite a topical one, given the kind of recent SVB and issues around there. It's kind of around counterparty risk. And James, maybe this one's for you. I mean, how do you think about kind of the inherent counterparty risk that exists in these cross-border payment flows? You're facing someone generally on either side, and settlement doesn't happen at the same time, effectively.
Yeah.
So there's an element of credit risk in these money flows, cross-border.
100%. You need to have a diversified set of banks you use. I mean, it's very difficult when you look at the credit risk rating of a bank. Probably the best thing you can use is a CDS spread. But if it issued debt, you can't look at that. If you look at something like Silicon Valley Bank, on the Thursday morning, I think Moody's had said that A1 prime and reiterated that rating. And by the close of business in the US that night, they basically shut up shop. So it's very difficult. I think the only way you can mitigate that is, one, obviously being on top of where your liquidity is and your treasury management, to Aaron's point, and then secondly, having multiple banks in each market so you can move money quickly. Now, if you're in the US and your banks are Silicon Valley Bank, Signature Bank, and First Republic, you're probably in a tricky spot. So I think what we saw with Silicon Valley was hopefully a 1 in 10-year, 15-year event, but it just reiterates that something that no one really thought about over the past 10 years is counterparty risk, which we need to start focusing on again now.
There's another angle to that, which I just realized, which is I've experienced it hands-on and written papers on it, which is if you're a fintech needing to access these bank partnerships, they are damned heavy lifting and, or often very risky. So yes, you need to try and build this diversification. But number one, it's easier said than done. Number two, it's a really quite a strong defensive moat once you have got it there. Versus competitors who
and it takes years. It takes years to build these bank account relationships. And when I joined Airwallex, we had one bank, and we've now got 50 plus. But that's taken us 6 years to do that. So I think it takes a long time to build these relationships. But like you say, once you have them, you do have something unique in the market, which is a selling point now. Especially when you talk about safeguarding funds and where you're holding client money.
And I suppose that's what, if you're white label, that's what you sell as the proposition to other fintechs too.
Yeah, absolutely.
Yeah.
I think we've got time for one more. So this is actually quite an interesting one, because we're discussing about Swift quite a lot on the panel, and kind of the innovations around what could replace Swift. Or this one is like, how did turning Russia off the Swift system, so effectively weaponizing the Swift system, affect the cross-border payments industry? What do you think?
I think Russia was still quite a small market globally. I think politically it's a big player globally, but in terms of the economy, it's still quite a small economy. So I think from our business, we didn't send or receive a lot of money to Russia anyway. And in some ways, it hasn't really worked. The Russian economy still seems quite resilient. So I think they basically looked elsewhere in the world, which isn't so reliant on the Swift network. But I don't think it worked. I think everyone thought you should come off the Swift network and the country collapses, which obviously hasn't happened.
It's a shoot yourself in the foot, and because then it drives the de-dollarization argument over time, doesn't it?
Yeah, absolutely.
Russia went exactly off to try and trade in other currencies as much as it could.
Cool. Well, I think thank you so much for joining us on stage. I think it's been a really interesting conversation. And enjoy the rest of the day.
Right, thank you, everyone.
Thank you. Thank you.